So now is the time for an interactive panel discussion. When we say interactive, we would like all of you to be a part of it. All of us want to build a great business, but how? Can we have an expertly curated approach to the same? So let us all put our minds together and crack that code. With a big round of applause, let's welcome on stage our moderator, Mr. Aziz Merchant from Brand Management Consultancy. Mr. Aziz. And of course, our fabulous panelists. We have Mr. Georges Batroni from Active Trades, Mr. Jamil Kiblawi from VATPro, Mr. Omar Chihane from SellAnyHome.com, and Mr. Arif Saeed from ASA Ventures. Please, hands together, ladies and gentlemen, for our panelists.
Ladies and gentlemen, big thanks to the organizers for organizing this very much needed platform. And I think there couldn't be a better time than today in a place like Dubai for hosting an SME Summit, where the government has recently announced some economic stimulus to promote the SME sector, mainly the SME sector. And I think if one looks at what these announcements are, I reckon they can address many pain points of SMEs that exist today. So I think with that, to set the tone, I would like to introduce our very esteemed panel. We have with us today Omar, who is the co-founder and CEO of SellAnyHome.com, Middle East's first and largest home buying service, providing free home evaluation and offers in 30 minutes. He has been referred in a recent article in Arabian Business as the man who disrupted real estate investment. Omar is an MBA holder from the London Business School. We also have with us today Jamil. Jamil is a creative thinker and entrepreneur. He has developed few businesses in the UAE. The latest venture is VATPro, the first cloud-based VAT management solution in the UAE, which is the answer to the evolution of the law in the UAE and the needs of the entrepreneurs who needs guidance and tools which match with their lifestyle. Welcome, Omar, Jamil. We also have with us today Arif. Arif is the man behind Arif Syed and Associates Ventures, ASA Ventures, a venture capital company founded in Portugal, whose latest offering is Calix, an intelligent customer happiness solution provider that offers call management services and data analytics for any business, but more specifically for the SME. Arif has led several successful entrepreneurial initiatives in Portugal, Switzerland, India, and UAE. His company, ASA Venture, calls Dubai its home and has 23 companies based in 4 countries under its belt. Welcome, Arif. Thank you. And finally, we have with us today George. George is the Middle East manager of Active Trades PLC, the premium global regulated broker dealing in foreign exchange and control for differences, CFDs as they call it. Due to his vast experience with leading financial institutions, beginning his career in 2008, George is a well-known figure in the finance industry. Prior to starting his career with Active Trades in May 2012, George was an executive in the Middle East Structured Products and FX team at JP Morgan Chase. George graduates with a bachelor's degree from the American University in Beirut, after which he went on to earn a master's degree in finance from City University in London. So, ladies and gentlemen, we have a very eminent panel here, and we want you to benefit from their rich, vast, diverse experiences. They've had many good learning, and the idea is for them to share the learning so that you have at least 1, 2, or 3 takeaways post this session today. So we want to be led by you. Of course, we have a framework, a structured framework, which we will follow for our discussion, but the main emphasis is on that interactive session that we want to do, which is mainly led by you. You have here a great panel. Take advantage. To start, I would just like to let you know that we're going to talk about three core points, or three core subject matters. One is, it's very important to demystify what you mean by great and sustainable. Sometimes when you say you're a sustainable enterprise, people think you're talking about the company being environment friendly at times. So that's not what it is. Second is very, very important, is to understand what does sustainable mean in today's times of digital disruption, where you're not even sure if your business model will exist in the next year or so. Third, how does an enterprise source funds for any idea or ideation and for it to take it to an implementation level and thereby achieve financial sustainability? It's a very key and a common pain point for all SMEs. You will say, you're asking me to do A, B, C, but I don't have the money for it. I think that piece is very important. How do we remain financially sustainable for existence and growth? And finally, I think we have a very nice piece which says, identifying gaps in an ever-changing environment and seizing opportunity from the same to remain sustainable. You have to innovate continuously. And I think these are all within the expertise and experience of our esteemed panel. So let's get started, and then the floor will turn towards you. So let me put this question to George. George, how would you define a great and a sustainable enterprise?
Well, first of all, obviously we're not talking about green companies. Not that green is not important, it's very important. It's just the subject we're talking about here. In terms of sustainability, I do believe, and also based on my own experience, a sustainable company is obviously, first of all, a company that has established and defined its product, but at the same time is able to make changes or adapt to potential changes in business or even in a regulatory environment. A quick example, for example, with us in Active Trades, which is the online trading environment, when we noticed potential changes in the regulatory environment within MiFID II or even ESMA, we were faced with a big challenge because we knew, for example, that a lot of companies and competitors will disappear. So what we did is, without changing our main offering or our core business, we just adapted and offered an alternative option, which is, in our case, it's ETFs. ETFs allowed us to bypass certain problems that we're facing and that our competitors will face, and that allow us to thrive in the future. So as a company, you need to identify your core strength, but also have potential alternatives. Another point I'd like to mention before giving talk to my colleagues, also I do believe that a good retention strategy is very important. Today, in such a competitive environment, it's been very hard to acquire new clients. So a company to be able to consider itself sustainable, to live on the longer term, it's very important to keep the clients, to interact with them, whether it's via good, maybe client service or other offerings. This will allow them to be more competitive and sustainable.
Thank you. So I think George was focusing a bit on adaptability and retention. So basically constantly increasing the value proposition, if that's how we would decode. Omar, how would you define a sustainable company?
So maybe on the disruption front, right? Well, first off, I think disruption at company level, be it big or small, happens at the company level, and then at the leadership level, and then at the employee level, and it has to happen in that order. So I give a lot of coaching and consulting with multinationals. Obviously, I'm running my own startup, but my background has been in corporate. So I led a business unit worldwide for Microsoft, based out of Dubai, luckily. And so I've seen both ends. I've seen the corporation level. Obviously, Microsoft isn't an SME, but it's still very relevant. And obviously on the startup front. And on the company level, especially anybody that wants to adapt digitalization and disruption, the first thing a company needs to do is essentially invest without a lean strategy, without output in mind. Because obviously, if you're trying to be disruptive, by definition, you actually don't have a business model, a business case to follow. There's a framework to do so that you're not just burning money. But it's very important to go through a process of trial and error and not be afraid of failure. Now, when it's a small SME, it's fairly easy to actually adopt that as a shift, as a company shift or company culture. When you're a larger company, it's a little harder. So what we've worked on with a few companies was around essentially Chinese walling a department or a specific project where the conventional rules, or conventional DNA, conventional investment wisdom does not apply, and then you basically let them go and try to invest as much as possible, try to trial or fail as often as possible, and embed that part of the culture. Embedding failure as part of the culture is really important to be disruptive. The second one is on the leadership front, and that is, like, I was an absolute victim of that. I really lived through it on the receiving end and on the giving end. But as my days in Microsoft, leading the business unit, I was sitting on the global product board for one of the business units. So any of the product strategies going in the next couple of years, I was one of the decision makers in the room. And inherently, when you have category leads coming and presenting something, in order for me to feel like I'm adding value to the conversation, I would look at that presentation and I'd try to perfect it and try to tell them to go do a little bit more homework in this area, a little bit more homework in that area. And as a leader, I thought I was doing a good job. But then if you fast track and you look at, on the disruptive front, when I sit on my board today, they look at my presentation, try to strip it down. They try to speed me up. They try to not make me care too much about being proud of the product that I'm launching. That behavioral shift is extreme. It's really at the end. So I have leaders on one end saying, you're overthinking this, just strip it down, just try it, test it, then perfect it, then scale, rather than just go in super ready. And so you're predisposing the corporate or an SME to kind of look at a presentation or look at an opportunity and overanalyze it and try to really perfect it and overthink it. And the third one is on the individual level, and that's quite counterintuitive because embedding failure in your thought process is really difficult. Like, nobody wants to not be proud of the first product they launch, and that's basically, Reid Hoffman, the founder of LinkedIn, said, "Don't be proud of the first product you launch." Or if you're proud of the first product you launch, you've launched too late. But embedding failure as part of the individual could be quite difficult. And that's something that an enterprise needs to address quite a bit. And if you look at also Reed Hastings, the CEO of Netflix, and he said a quote that was really, really interesting, talking about they don't cancel enough shows. They're not edgy enough. They're not risky enough. They're not trying enough. They're way too perfect. And I think embedding that kind of culture from company leaders and individuals will enable a company to actually be disruptive and face digital disruption head on.
I think that gives us a flavor of digital sustainability, and I think it's a top-bottom approach where culture plays a big important role in the transformation of the company. Thank you, Omar. Arif, your thoughts on building a sustainable?
Yeah, before anything else. After whatever was added by my colleagues, there's not much to develop, but I will give my take on this. I think building a great, when you talk about building something, we are talking about from the idea level until the actual execution. To build a sustainable business, you need to transform, and I will go, be as practical as possible. Try to transform everything that you have in your mind in numbers. If it's operational, if it's quality, it's KPIs, as I've heard Mr. Murtaza speaking before. I won't say this to impart knowledge, I would say this more to inspire. Just from everything that you have into numbers. A business idea to be sustainable has to be able to be read by the investors or by whoever is pumping in the money, and they need to understand that the idea will work regardless of any passion or any personal agenda. Now, what I think is that within these set of numbers, the one that normally is often kept aside and not looked at too much, and I really need to focus on that, is the cost per acquisition, the CPA. Any business needs to acquire customers, and the most forgotten or the most overlooked is the cost per acquisition. This is the number that we have to be looking at. Sometimes we have a brilliant idea, we put a lot of passion into it. The first step should be to be the biggest adversary of that idea yourself. Sometimes the idea that we have for a business is not, we might not be the right person to execute it. I normally give the analogy of the surgeon that cannot operate on his own kid, right? And when we have an idea, when we have this moment, normally we tend to think about whenever we find a hurdle around it, we try to overcome it, overcome that hurdle, even justifying it somehow, even when we are not right. We need to be the biggest adversaries to what our idea is, not have the emotional attachment to our businesses, so that we allow them to grow in the right fashion.
Excellent. Arif, you made a very good point. I think the thing is not to fall in love with your own idea, so that you can be an advocate to look at its pros and cons and not circumvent just because you love it so much. So thank you very much. That was a good point. Shamil, from your experience, something that would define?
It's true, I agree with you about the KPIs and about not being too attached to your business. But in my opinion, greatness is, or being great business, is a result of what you achieve. And it's a result, it's the roadmap to where you get. So I don't want to dwell over that a lot. My focus is about sustainability. And in my experience, sustainability comes from 3 key pillars. One of them is being focused on your core delivery or your core objectives. So being very effective and being very focused is extremely important in ensuring that you're delivering the right product, the right service, consistently. As part of also being sustainable, my other pillar to that is don't cut corners. We have a habit in the Middle East or the Arab world to look for ways to cut corners. How can I do it cheaper? By doing it a bit cheaper, then I'm smarter. But in reality, it's that investment, even if it's more expensive, you need to look at the long-term view on that and how does that impact your business in the future. So cutting corners is a very important element. It comes to the people, it comes to your recruitment, it comes to your human capital. And that is a business mindset. It's an attitude. It's something that you build into the company from the ground up. The other thing that's important in building a company, and I come back to the human capital, is the training and how much you invest in your people. That is fundamentally an investment that goes a long way. A lot of businesses don't understand how to measure that investment, but if you look at the long-term deliverables of that, it's of very high value in my opinion.
Excellent, thank you. So what Jamil is telling us is stay focused, do not cut corners, and have a mechanism to measure the impact of the investment. Thank you. So to sum it up all, I think we've got some very good takeaways here of how do you define, or what is it that it takes to build a sustainable, great and sustainable enterprise. Let's go into the second.
One more point I'd like to mention. We even discussed it before. I do believe also, in addition to sustainable, a great business is also a business that would have an eye on its internal results, but also an eye on the effect on society and what it does and the good it can do outside. Today, people, new generation, they really do care about society, and some company can lose their reputation very quickly if they have bad habits. So also, it's an important thing to keep an eye for.
Yes, George, very good point. I remember you talking about it. Yes, thank you. The second dive for us is, let's look into what does sustainable mean in times of digital disruption. And I think for this, I would like to request Omar to lead this discussion because you are, they call you the disruptors. You tell us.
I mean, for us, when we're looking at our numbers, sustainability is first of all, the first question we need to ask ourselves when we're proving our business model is can we scale it, right? Can we can we scale it sustainably? Which means if every time I need to serve something, I need to, let's say, hire 50 people and train 50 people, and every single time that I try to get into a market, and I'm not able to either automate or sustain my speed to go to market, then that takes a back seat, and that actually answers the question that suggests that it might not be a sustainable model, right? So it isn't just in terms of cash flow. If you're burning too much cash, can you grow fast enough before you run out of money? That might not be, although your business could be sustainable at a certain level. I think the most important part for us is also looking at the operations and how do we get to a point where the operations are streamlined across, if we want to do market growth or vertical growth or whatever, in a way that's sustainable for our business, that we could actually keep control and grow while keeping quality, while keeping similar levels of service, et cetera, et cetera. So on the digital front, although we could prove a certain aspect of our model, which is the cost per acquisition and really the unit economics of every single one of our potential buyers and what that represents, the idea is, can we scale in a sustainable manner so that we don't run out of cash once we actually grow too big. So I think that's really important.
So I think, Omar, let's say there's somebody in the audience who has a very asset-based business model. How should he predict as to when would there be a threat of a substitute online business model? How does one do that?
It's always, I think the most important part is an outside-in perspective. There's someone, I don't remember their name, but they were talking about how to become a billionaire, and it's really identify an industry, identify all the pain points and all the friction points within that industry, and then digitize it. So essentially, if you are under threat, the first thing you need to ask yourself is, are you actually adding value? Are you really just kind of the fat in between the buyer and the seller, and how can you enable a transaction rather than just hold back and protect, because then someone else comes along and sees that as a big problem, because ultimately you end up slowing down market coordination, right? Mm-hmm. So the first thing you need to understand is what problem you're solving, and then the next thing you would need to understand is how can you solve it in the most transparent, fastest way possible, and usually digitization comes into play there.
So what Omar is telling us that the online doesn't have to be or strategy. It can be an and strategy too. So this should be a good, important takeaway, Omar. Thank you. Anybody else would like to contribute to that? Arif, Shamil, George?
Quick thing. You mentioned like disruptive, and we were discussing it a little bit that. Maybe digital disruption, we crossed that point, the disruption happened, right? You were saying earlier. And now also it's about just innovation, accommodating, going back to basics sometimes, because maybe I'm not gonna create $1 billion idea every day and disrupt it all, but business goes on as usual, and it's important to be able to survive it.
I think that what we'll add later, what we could add to this later is, Shamil, when you talk about VAT Pro, how you have sort of digitized the whole VAT process. I think moving on, let's look at another important issue here. How does an enterprise source funds for funding an idea to implementation? And how does it then achieve financial sustainability? I would like to pose this question to Arif, because he is presented by a pitch every day. So let's understand, what does he look for when he has to put his dollars in?
Sure. Sometimes more than one a day. I come across people almost every day that have an idea to pitch. They want to raise funds for their seed capital for their business. Normally, we hear out technology-based businesses, so I can talk about those. And I normally identify these very, very fatal mistakes. Sometimes they put it all about themselves. It's about that person. How can that person be of use? It's not about the business at one point. Or when you make it completely the other way around, then we still need to have someone that will run that show. So basically, there are a couple of mistakes that entrepreneurs do a lot of times, and especially and again I will reiterate that trying to fix a bad idea is normally a bad idea. What the normal procedure should be, or if you're looking for raising funds for your idea, for your business, is to, and trust me, every single thing that you do, every single thing that you plan to do can be somehow predicted, and it's possible for you to make a cash flow forecast for a year's time, even without having started the business. And normally there's normally this understanding that let's try to be pessimistic. Let's try to be pessimistic to see if I can convince or portray my idea better, or try to get funding for this. Normally that's normally a bad idea. It doesn't work. What we should do is to draw a line between pessimistic and, of course, optimistic, and then try. I'm not going to use the word realistic because that doesn't exist, but again, try to be bending a little bit more towards the optimistic side of it, and then make sure that you make it happen. Every single thing that a business is basically an organism. It's a living organism that interacts with the rest of the ecosystem, and everything can be predicted. Every single again, if it's related or operations related, if it's talent related, as my friend said, you can set KPIs to that. You can transform that into numbers. If it's sales related, or it's volume or finance related, then you can of course set targets and sales figures to it. So everything can be predicted. It's a lot of homework actually that you need to do. And then there are several ways to prove the concept without actually having to invest a lot of money into it, or without having to go out and try to seek funds. Normally, I find entrepreneurs spending their savings in trying to find investment when they could have actually tried to go for a proof of concept, have a couple of numbers tested out, and go to an investor with a very complete A to Z story that sounds believable, and again, not make it about themselves. We don't want to be the artist that cannot be replaced.
Fantastic. Thank you. Omar?
Just wanted to add to that as well. I'm sure you go through the same thing. Investors, especially at the seed stage, they'll invest in a vision and a mission. They'll invest in a person. Very rarely they'll invest in a business model, because if the person is strong enough and the vision is bold enough, they'll figure out how to actually get there, and they're likely going to change 5 different ways to Sunday on their way there, right? So it's really important that as you're pitching an idea, the vision, get married to it. The mission, be married to it. The way you present yourself is essentially one of the biggest contributors to getting an investment. But most importantly is don't get too married to the product itself. Because no one cares, really. All they care about is, are you able to actually achieve that vision and that mission of solving the problem? How you solve it doesn't really matter. The investor just wants to believe that you have the brain power, capability, will, and drive to figure it out. Because you're like, I've changed my business model. We've pivoted a few times. So I never raise based on, this is how we're going to get there. This is how we think this is what we think will get us there, and if along the way we believe that there's a better way, we'll just adopt that one fast, right? So that's quite important.
Thank you. I think some very valuable takeaways there.
Just want to add a couple of more things which I was just wanted to finish. So basically, have always this old saying in mind: the smaller piece of a bigger pie is always the way to go. If you are an entrepreneur that can only work on a specific industry, then I would probably call you something else and not an entrepreneur by definition. Or by today's definition, should be someone who can generate and execute a successful business idea regardless of their understanding of that particular industry. It's not someone from the industry that will have that will be the right person to manage it. Probably the entrepreneur is someone different. When I say, of course, a smaller piece of a bigger pie, never try to shy away of giving away equity at the early stage, because in reality there's a lot of value add. The entrepreneurs are trying to protect something that they don't even have, but that can be the enabling equity. That can be the partner that you really want with you. That can actually accelerate or incubate the idea, and then if it goes well, and if you're able to let go of that royalty kind of an idea in your mind, if you're able to do that, then probably by the next year, in 2 years, you're probably thinking about something else, and you're probably coming up with a new idea, and then you're probably approaching the same people you had success with. So it's try to be try to let go when the time comes, and especially if we're raising funds, we really need to we don't want to get debt at this time. It's not. I've heard a lot of different comments on the debt side and the banking side of it. It will kill the machine. You want smart money and not just money. So you want money from the right people, right?
Thank you. Thank you.
You'd like to open the floor to any questions? If you'd like to open it up.
Sure. We could do that. Yes, please.
Oh, we have a microphone for you. Thank you.
Sir was going to tell regarding VAT Pro.
Yes.
Traction on
If you allow, we can give Jamil 5 minutes to talk about it.
Yeah.
Jamil, please, can you just develop very quickly, sum up as how you build a sustainable enterprise?
Building on what Arif started with a minute ago, by saying an entrepreneur is somebody who has different skills. Transferable skills are very important for an entrepreneur. And this is part of my personal experience. If you ask my wife, or you ask my friends, or you ask my family, they'll tell you I'm the worst accountant on the face of this planet. And I'm definitely not someone to be trusted with working money. It's as simple as this. But I'm a very creative person. And that's where my skill set sits. So a year and a half ago, or about a year ago, a year and a bit, over a dinner that I was having with some friends, the subject of VAT was predominant in that discussion. A couple of them were accountants, a couple of them were auditors, and that discussion just kept on evolving on the table, and I felt like, what the hell is going on? I don't know anything about this. Which took me back home, and I went back home and I kind of started doing my own research on the subject. From the discussion I realized, as an SME, and most of my career has been in being an entrepreneur and an SME, I realized that there is a gap in the market when it comes to VAT. And the gap was between how the norms are of doing your VAT and how people are used to doing their books of accounts and audits, etc. I realized this has evolved over the years, and now you've got platforms, online platforms, that help you do your accountancy. But the question kept coming up during my discussions with my co-founder, where him and I had several discussions later on. He happens to be in the audience and he can verify what I'm saying. Every time we spoke about the subject, I would be hitting a wall with him, simply because him being an auditor originally, and that's his skill set, my thinking from a creative perspective showed that we were not meeting on the same grounds. And he kept persistently giving me new challenges to think about. So every time I came back to him with a solution, I would find myself, well, I'm really far out and I don't know anything about this business. So I had to marry my skill set with his skill set. His experience as an auditor, my experience as someone who can challenge a situation and work with that and come up with an idea to solve it. Till we are today, and where we are today, or where we've reached today, is we actually have managed to develop a platform for VAT, allowing our consumers, which our target is SMEs specifically, giving them a solution that is affordable, that is cost effective, and that allows them to do their business and conduct their business by focusing on what they're supposed to be focusing on, and that is their core business. Focus on your core business. You don't need to be pressed down with mundane issues of how is my calculation correct. I have an audit coming up. The government is checking on me. My financials, I'm trying to hire a skill set from outside, which is going to cost a lot more now to my business and is going to affect my bottom line by hiring these individuals to do my accountancy for me. We've managed to streamline that through a platform where everything is conducted online. Regardless of your business, we actually took every single different type of business within SMEs and we catered to them by understanding how the laws work, and we've connected them to the charts of accounts, allowing for the VAT process to start at the point where you actually just take a scan of your document or you take an image of your document through a sophisticated OCR, and then the entire process till the point your tax treatment is completed is done online without any intervention from humans. Three things we've achieved here. One is offering a much more affordable solution, offering a higher accuracy to our customers, and thirdly is eliminating the risk of you providing the government with any errors or mistakes. Hence, they can't come and challenge you. And besides that, we're actually taking that responsibility of guaranteeing that you get 100% accuracy, and we will be taking that responsibility through our insurance. So we insure this process.
Thank you. I think we were joking with him. He says he doesn't know much about figure, but he could still figure out what needs to be done. So, sure. Can we take some questions?
Hello, gentlemen. My name is Andrei Linik. I'm from Dubai Corporate Office. We are helping our clients to protect the intellectual property. And as far as in the area of intellectual property, I want to ask you regarding, do you feel that in this market the competition sometimes goes to the gray area? And so regarding this, do you feel that intellectual property protection is the big part of the building of the sustainable business? And especially also the second question to Arif, as investor, does it mean for you if the startup already think about the protection of their idea or their project, does it give them some advantages in terms of raising the funds? Thank you.
So why don't you take first and then Arif?
If you can answer maybe just one of them, and then we can network later.
Okay, yeah, go ahead.
I can answer the first part in terms of protecting the IP, and that kind of leads, that's super important for anybody trying to come up with either a new idea or new brand, because when you start actually looking to raise the defendability of your brand is also very important, because then if everybody starts naming their product the same way you do, or everybody starts naming their company the same name, you kind of dilute the value of that brand itself. So having, protecting your trademark or having your IP protected is actually very important.
Okay, thank you.
But by the way, okay, so you were asking about how important it is to have your idea protected and how investors look at it, right?
The first question was, do you feel that it's important? Yes, in this competitive market where the technology is usually
copy in ours. For you, yes, my question was, does it give some advantage to the startup when it comes to raising the funds if their concept or project are protected?
Well, okay, there are two things into play here. First is you, of course, you need to know who you're talking to. You need to be talking to a trusted set of people that can, and sign an NDA before ever discussing your ideas. Probably an NCNDA that would be a better document. But before that, understand that if you're startups, SMEs, if it's a business model, if your idea is marrying say one thing with another, is that just a pure business model kind of a thing, there's no copyright on that. So you cannot protect a business idea by itself. If you have a product, if you have a brand, which you don't in the startup, in the startup, you don't still have a brand, right? So that can be protected at some level, but the idea behind it cannot be actually protected. So you need to be aware that when you are pitching yourself to the investor or to the market, you need to be sure that you are signing the right legal documents so that you protect yourself. And of course, this is what it takes to be an entrepreneur. You have to reveal what you want to reveal and reply to questions when they are asked, but there's always a smart way of doing it. How well you are able to nail that, that's exactly how well you're probably going to succeed. So of course you can go and show your algorithm, or you can say that I have an algorithm that solves this and this problem, and here's the algorithm in play. That's what the investor wants to see. They don't want to see your code. Just to put it in a public example, right?
I think unfortunately there are many questions there, but we don't have the luxury of time. The good news is that it's going to be lunch soon, so nobody's going to go away. We go here. You can approach the panelists and whatever queries you have, you can gain some clarity on those. But thank you for being a great, wonderful, interactive.
Thank you. Thank you so much to our panelists and of course all our delegates. And Mr. Aziz, thank you. There is plenty of time to network in the luncheon and again later this afternoon. We will now be breaking for that luncheon. Thank you, gentlemen.